Welcome to Trading Lounge and the commodity report. There's not a lot of change. I'll just move through reasonably quickly here. So with Bitcoin here on the weekly chart here, we know that at the 50,000 here that we'll be pretty close to all the Fibo retracement levels and so on. This is the 50% and the 61 is in here, and the such and such a little bit higher. So this is, if it was going to fail, this is where it was going to fail from. Secondly, it can count up here as an A and a B and a C wave up here, and we can count 5 waves up here. There's still a little bit to go up here. We'll take a look at that in a moment, but that is 3 waves up to that point, so technically it can be corrective. Obviously the results of the SEC today, approving or not approving it, will play a part. That's not for me to guess Gary moves. So if we were past this 5 waves in one way or another, then I could tell you that we're certified bullish at that point, but I can't do that. Now, this particular move to the upside here is kind of interesting, because if we take the top of this one here and put this one on the low here, you would expect, if we were looking at 1 and 2 here, you would expect wave 3 to be longer. But there is a nice 5 waves in here. There's a beginning, a middle, and an end to this. So this length of this here, where are we, there to there. So basically, so far as a 3rd wave, we're still quite short here, because that at the 50,000, just above the 50,000, it would be the same length. So it does in fact make a nice ABC correction here in that sense. Now, I could say in favor of a wave 3 here is that the wave C is really quite strong, because normally in a wave C, we would see it, compared to wave A, would see it be a bit lazier, in most cases, running out of volume and those sort of things, but we're not really seeing that. So we're seeing this is a 5-wave structure here, not quite finished, but it's there. So that means that if it was going to be wave 3 here, it's still too small, even at 50,000. So it would have to push this up here further. So then we would need to probably look at this here as a wave 1 and 2 here, and then 3, 4, 5 up here, and then bring this 3 up here. Could be something like that. Now, you could also imagine too that 50,000, this is all really about the 50,000 here too. So, and coming into old highs here, the normal process is that would see fluctuation around this old high here, before it and after it and so on, until this old high becomes the support, So, a lot of the hype for Bitcoin has been priced in already. This is all retail money, let's face it. Even if it is quite large, there's no indication that BlackRock and Van Eck kind of 1% has been allocated to this market yet. It's just not there, So it will take, it'll take months before all that plays out. Sure, they can allocate it straight away, that sort of thing. That's not a problem, and it could get quite volatile. There's still a lot of sellers in this market as well. When you have a look at the futures market here in the leverage funds here, we see 3,000 here and 13,000 here. It kind of balances all up really, with the asset managers sitting in here, but the hedgies are still quite strong on the short side here, the leverage money here. So I think that's kind of interesting as well. But that's here nor there at this point in time. And yeah, so we just got to wait and see really. We can have a look at this trend here. I just had it sitting here on this 15-minute chart. So basically, I could build this trend to the upside in lots of different ways, and that means that we've had this sharp little move in the market here. I don't know the full story, but somebody hacked the SEC's Gary Gensler's account and tweeted out that the ETFs have been approved, and then Gary had mentioned, got on his own tweet and sent back that no, we haven't done anything yet, So I think that was part of that. So but it was a bit of a, I mean, it was good that we got that extra high here, because looking at all of this here, it just didn't get a high above here, and I was looking for that, you know, and now we got that. So I could put 3, 4 here, because we were looking at 1 and 2 here, and, you know, going up for 3 and 4 here. But the sharpness of it and the depth of it, I could also label that as a little 1 and 2 in here as well. It's here nor there, really. So but yeah, the bigger picture is all about this particular number here, and when we talk about this number, we can talk about it in terms of 50,000, 53,000 here roughly. That's the top of minor group 1 at that point, and the lower end of from this point 50,000 is minor group 2, which is 46,500, the lower end, and then the 47,200, the 48, that's all of group 2 here. So group 2 and group 1 are the swing ranges for this particular number. So yeah, look, I'm not going to even sort of worry about going, you know, over the last couple of days I haven't really worried about it, because, you know, it's big news coming out, you know, and obviously Bitcoin's got a fantastic fundamental narrative for a longer term trend. You know, we've got the halving in April, and like I said, these ETF funds, you know, hopefully they're going to also educate the public and, you know, drag more retail money into the market, and that institutional money can be, you know, allocated pretty much straight up, but now that the accounting rules have been changed and so on. So there's a really good story for this particular product, I have to say, this commodity. Okay, so let's just go into the DXY here. So this is the futures contract here. So I'm on 15 minutes. I just need to go back out to maybe daily here for a moment. So I'm pretty excited about this, actually. And I'm excited about it because with the Dixie here, the US dollar, we can count 5 waves down here, as you know. And we've got a beautiful little 5-wave structure up here. So we're in either the B wave at the moment. We need to go up for the C wave. So when we get to the top here, and then we, you know, get to the top, we should start coming down at that point. And this is where we'll start to look for long trades on the euro, the Swissy, the Aussie, and all of those sort of things. So we'll be looking for some longer term forex trades in that, and we'll be moving over to the new website Friday. Friday morning for the English time, Friday afternoon for the Australian time, and so on. So hopefully, you know, we'll be set up, because we've got portfolios for commodities and forex and crypto and stocks, and yeah, so we'll be able to put in some trades for those, but they'll be on the long side while this is on the short side. But this also brings up you know, other fantastic possibilities as well. So when this starts moving down here, we're going to see the likes of gold and silver and all the gold stocks, and that move up as well. Probably copper here, iron ore's doing its own thing, uranium's doing its own thing, both bullish, all bullish stories everywhere there. So yeah, so this here just on the was on the 15-minute chart here. So this is this here is the A wave and the B wave and the C wave to the upside here. So a bit of a spike there, but we'll put that on the top there. But a beautiful impulse wave here. I could put the B wave here, but it's probably over here, and this would be a smaller ABC pattern here for the B wave, and then down for the C wave at this point. So I won't worry about that too much. But an A and a B and a C for the B wave, and then down for the C wave to make the B here, and then up. Could it go straight up from here? It could do, but I'm not even sort of bothered about it if it does, because we got 5 here. We'll get an equal length over here, and you know, the time that this took here in terms of time, you know, we won't be ready to go long on the Aussie and the Swissy and the Euro and so on for probably 5 to 8 days, somewhere in that sort of space. You know, I'm not quite sure, but we'll get there when we get there. So we'll just see which this is here, but it's a good case for this to be sitting here with this. But you also need to understand that the important thing, even if you're a stock trader in any of the other commodities, this leg here needs to play out on the other side over here, right? So this leg here, so this leg moving up here, when this is moving up, we're going to see gold and silver and that move down, right? So it's only when we get up here that we can start looking to go long in gold and silver to come down here. Okay, so just understand that, and that's what we'll be looking at in that space. So just go back to the daily chart here for a moment while we have a look at these here. We don't need to look at. We looked at the interest rates here the other day, and we talked about, about the Fed here coming back to their 2% inflation target here, so they're on track for that, so that's all good. And the bonds are here, so with the bonds here, that's on the monthly chart. We've got 5 waves down. We're looking for an ABC back up here for that. So we're in that A wave at the moment, and we still need the B wave. I've probably drawn it too big here, but you get the idea. But we'll just go into the daily chart here for a moment. So this is our 5 waves down here. You can see that clear as a bell, and we need to be up here somewhere, and obviously the 100 area here is going to be, that's where it's touching on at the moment. So we're still looking for a little impulse wave on that there. If I just go in, I just want to have a little look at that top there. Just let's go to 15 minutes. I'm just doing this for my selfish self at the moment. Let me just check that top there. Let's just check on that for a moment just to get a bit of an update. So we could look at that as 1 and 2, 3, 4, 5. So that's wave 1 and 2, and 1, 2, 3, 1, 2, 3, 4, 5. So yeah, do we put that together? So 1, 2, 3, 4, 5 for 1 and 2 and 3. Can we look at this as an all of a wave 4? Yeah, let's just see if we get a move down here at some point. That will give us 5 waves down. If we get 5 waves down, then we're going to get 3 up here, and then we're going to get another 5 down, and then we'll go up at that point. If we only get 3 here, then we could go straight up from that point. Anyway, I'll keep an eye on it. Doesn't really matter. And we want to have a look at quickly, just have a look at the yields as well. They're on the same boat. Let's just go to the daily chart here, and the yields are on track opposite from the bonds. We've had a nice 5 waves up, and we're looking for an A and a B and a C down here, so there's no change in any of this. I mean, the only thing that I can think of here, and I won't know this until I see the bonds here a little bit, it looks like a little 5 waves up, so we'll get a bit more. It could be here as a little ABC pattern here, and then one more leg down here and then up. I think that could be the case looking at the bonds, but I just have to wait for a couple of sessions to see where I am with the bonds on that side of it. But generally speaking, this is where we are. If any of our members trade this, then let me know, and I'll dive in a little bit deeper and make a better call on them. But anyway, it's important to know where the yields and the bonds are going. They help us with the rest of the market, with the dollar. That all feed. It's all about the money. It's all about the interest rate, and it all feeds from that point. And yeah, so now we come over to gold, and so in the bigger picture here, we had a look at this on the monthly the other day. I just want to go back here and just check it out again as well. So it goes back to the 1830s here. Pretty sort of flat there, but we'll call that an accumulation process. This is on log scale, this chart here. So from this low to this high here, coming back, we've pulled back quite deeply here, so we can use this as a wave 2. So a lot of folks will be looking at this in different ways. As I mentioned before, they'll look at this as probably a wave 4 because it's quite big, but the fact that it's pulled back that deeply here, we can look at this as 1 and 2 and 3, 4, 5, but because it's pulled back quite deeply into the 70s here, then it's more likely to be a wave 2. So I'm taking a much more bullish position on gold than most. It's I'm not in the Peter Schiff Bitcoin gold war. I'm too old and crusty for that sort of stuff, but it's pretty difficult to see to call the end of gold. Do you know what I mean? Like to see it you know, back down here somewhere. I mean, anything is possible, but you know, it's a nice, you know, humans like shiny objects, you know. So it'll always be there in one for something, one reason or another. So the reason I'm saying this for is because I'm looking at this here as wave 1 and 2, and then I'm looking at this 5 waves up here where most people have got this as wave 4. I've got it as wave 1 here as well. So 1, 2, 1 and 2. I just see it continuing to build through time, you know, that's all. And all I'm seeing is impulse waves to the upside and corrective waves to the downside. So it's pretty hard to prove me wrong. Doesn't mean I'm right either, though. Do you know what I mean? So we're looking at this 5-wave structure here. Most Elliott people have got this as a wave 4. I dig that. But when we move up here, I've also got this as a wave 1 here as well, and a wave 2 here. So we're building up for the long term here, because this 5 waves here, you know, you could put this here as 1, 2, 3, 4, 5 here, but the likelihood of this wave 2 being smaller than yes, I mean, as a wave 4 rather, it wouldn't be smaller than this one. So it just doesn't fit. I think I've got the right thing here. It's just going to take a lot of time, that's all. So this wave 4 here, we're going up to wave 5 here, and there's different ways to count this up here. We're just going to go to the daily. I don't want to spend too much time on all of this, but so then we come into here. So that's that wave 4 here. So 3 ABC here for 4, and then we're looking at this as wave 1 and 2 here again, and moving up into the next sequence here. So this here is a little bit confusing. I had a bit of a spike and all of that there, and to be honest, I don't know the best way to count this, but as I mentioned with the dollar here, when we looked at the dollar over here, the dollar needs to do that that ABC to the upside. It's got the A wave already. We're in the B wave here, and it could do a little dance like this, and then it needs to go up for the C wave, and then it comes down. Well, while that's going up there for the dollar, then this is likely to pull down here. Now this is likely to do a few little swings in here. This does appear to be in 3 waves here, so there's half a silly chance that it can pull down here. I'm just not interested in calling a trade in here. When the dollar gives us that ABC pattern here, and we've got the first impulse wave down here, then we'll start building long into gold, silver, and you know, some at least 3 other currency pairs as well. So this is the turning point, and this is like 5 to 8 days away, 7 to 8, 7, 10 days, I don't know, whatever it takes, you know, always longer than one thinks it takes, you know. But yeah, it'd be something like this. And like I said, you could count this differently here. You could count it in a lot of different ways. Because it can be counted in different ways, it's kind of makes it difficult to give any assurity on anything, you know. So I'm just not going to bother with it at the moment. And the same with GDX, as I mentioned before as well. With GDX, it's all about the $30 mark here for that. So this $30 mark here. So when the US dollar is ready, then this will be ready as well. In the, you know, at this stage, we'll definitely be long above here. What we want to do is bring that down to the next high, and that will be about the right timing. So this will be good for all the gold stocks at that point in time as well. Now this particular move here, you could also count this in different ways as well, so I'm not even going to bother with it. All I'm bothered with is the long trade setup, and I can tell you it's not here yet. Okay, so it's that simple. Then we come over to silver, and like silver's got to come down further while the US dollar pushes back up a bit further. But yeah, as I mentioned here before, there's different ways to view this whole pattern here. There's different ways to view all of this, but what I do take away here is that things like this move down from here to here is corrective. Now it doesn't have to be 1 and 2 here, it could be in another triangle pattern here, but the fact that it's corrective means that at some point in the future this top is going to be taken out. Now this point here also looks like it's in 3 waves, doesn't it? So it also looks like it can be played out in terms of a corrective pattern. So it's probably in some sort of triangle pattern, but it needs to come down and test the 21st, and it won't be ready for about eight days yet or something or other. I just want to see what other patterns it has. Yeah, this pattern here, something like this, you know. Anyway, it's not ready just yet. So then we move over to base metals. Let's just roll up here a little bit, and this is COMEX copper here. And yeah, so on the LME and this market here, we can view this here as 3 waves to the upside. That's always sort of, you know, haunted me a little bit. So we could end up probably, or maybe also in some sort of triangle pattern over here. I don't know. It is possible to get 5 waves up here in some of the other smaller markets, you know, yeah, I mean, it could be 5 waves. It can kind of bend the envelope a little bit and do it. But what I do see is I see that this move down through here and here and here is corrective. And then this little move here is in 5 waves. So it's actually giving us a little impulse wave to the upside. So we could go long. I was thinking that this would be little 1, 2, 3, 4, 5 up here for this, you know, and then I'll just wait and see if it comes down at that point or if it moves up again at that point. I don't know. We'll have to see what comes at that point. But this little move here was kind of interesting. I think, I don't know if I've got it on the daily or intraday on this chart. Yeah, so looking at it sort of like this here, I still got it in a corrective pattern here with an A wave here, then a smaller A, B, and C wave over here with 1, 2, 3, 4, 5. So we want to trade that 3rd wave up there, basically. I'll just see what we've got on the hourly chart here or whatever. No, maybe I've got it on the 15-minute chart. Let me just... Well, I don't have it labelled here, but we can label it. We really want to change that out to at least the next smaller one here. So we've got 5 waves up. That's that little 5 waves there. And I'm thinking that we need to somehow get, you know, like the dollar and stuff, we need to get some sort of ABC pattern here. And, you know, in about 5 or 10 days, we could be ready for this side of it, you know. But we just have to, we're not there yet with this. We're not there yet with that. So then we come over to, let's just go back to the daily chart here for a moment and then go to iron ore. So as I mentioned, you know, we're looking, this is out of Singapore, so there's not, you know, you could probably trade this as a CFD or something, you know, but basically, you know, you'd be trading iron ore stocks. So in this case, though, we've got the A, the B, and the C wave down here. Nice corrective pattern. And then we're looking for the A1 and 2 here. And from wave 2, we've been working our way up for wave 3 here somewhere, and wave 4, and so on. And then we've got everything in between here. And we've got a little 1 and 2 here, and going up for this 3rd wave. And in that case, we've got 1 and 2 and 3 here. And in that space here, we've got a little 1, 2, 3, 4 here, and probably 1, 2, 3, 4, 5. So we're probably in wave 4. We've been looking for it here. So the stocks that we've been looking at with these like FMG and all that, they'll be coming back into their wave 4s now, and Rio will be the same, and so on, you know. So yeah, you just have, you know, do what you need to do really for those. But yeah, I mean, you know, this has been, you know, the center of the main trend here for a while, and now we're going to be in wave 4s and 5s, so it's going to be a bit of a hard slog. So you wouldn't want to be holding any sort of product that would cost you in margin costs or overnight financing costs and those sorts of things. So it's okay for just being in shares and having money in, you know, FMG, Rio, Vale, BHP, those sort of things, you know. So yeah, and we come over to uranium. So no real change in uranium. The main point here is that Coming back to the 20s here, we've got this beautiful 1, 2, 3, 4, 5. So, you know, it's pretty damn clear. Then we've got the corrective pattern there, which I haven't labeled in this case. I don't know where it's gone, but the A, B, C here for this, and then 1 and A, B, and C for 2. So we're building further up here in all of this, very much like gold in a little way, building up here and that same sort of thing. So yeah, I mean, that's it really. So we've got positions in here, and I will put them in shortly, like we had them in the old chart. So I'll put them in. But yeah, as an ETF, this is just a hold. If you're looking for somewhere to hold, this is a hodl situation here, and it's going to be quite time consuming around here with all of this. Wave 2 could probably pull back to the wave 4 over here in some regard, so just be a little bit mindful of that. So, but if you're in some, you know, in terms of, you know, 401k or some SMSF or something, you know, some little fundy thing you got holding in, this is a fantastic long-term trend, you know. We've talked about it before in terms of monthly here for this. So you just, this here is just wave 1 here and 2 here, then there'll be 3, 4, 5 up here, you know, that kind of thing. So there's nothing wrong with this, you know. It just depends how you feel about, you know, uranium and fossil fuels and, you know, all of it. So that's that, and we'll come over to the energy sector. So I'm just going to drop it back into the daily chart here before we drop it over there. And so crude oil. So yep. So with the crude oil, you can, this spike at the low here, you could play this out whichever way you wanted to. You can look at this as an A and a B and a C wave up here for a bigger B wave, making new lows down here. You could include this in as the low and look at this as 1 and 2 and 3 and 4. It's just a little, it bothers me because it's just one little spike and it can change the count. And, you know, I really prefer a whole lot of traffic and time spent at a particular point to really help validate something. So, yeah, different people will have different counts here. So I'm not that really concerned about this little thing at the moment. But so my focus is really on this trend here. So the trend here at the moment, is that down to this point here is in 3 waves. It's an A wave, a B wave, and then 1 and 2, and 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave. So the reality is, while that low stays in place, we've got 3 waves down to that point. So the whole thing could be an A and a B and a C, and we could actually, you know, continue up here for that. I don't know, but what I could tell you though is that this move here, as if it was a positive move here, as 1 and 2 here, then this move, as soon as we get 5 waves up here, anything above 5 waves, then we'll know that it's bullish, and we'll be taking out that high over here. But I don't know that yet, because the other side of the coin here is that we can view this as wave 1 here and 2 here rather than a B wave, and the 5 waves down here as wave 3. And then this would make wave 4 here, and then an A and a B and a C for wave 4, and then we come down at that point. So I don't have any answers about this stage in the bigger picture. It's still playing out though on the smaller scale of an A and a B wave here, or B wave even into here, and then a C wave up to this point. So once we get 5 waves in that little leg there, anything above that, then we can look to trade long. Now what we can do as well, now that that's said, is that you could also go long, if I just still can't get used to that word clone, we could go long above this one here. If you did that with a very small position, it would be tested again. You could take it out at the top, but yeah, I'll remove it, but you could do that. I'm not going to worry about it. I don't want to trade inside a correction. I'm looking for a trend, you know. And talking about trends, then we can go to natural gas. So with natural gas here, We could view this low here as 1 and 2. This is a daily chart. Then 1, 2, 3, 4, 5 for third, fourth, and 1 and 2 and 3, 4, 5. Yes, wave 4 does overlap wave 1 here, but yeah, futures market, I can live with that. So this move up through here, it depends on what markets you're looking at. If you're looking at the spot market, it's probably higher. This is the futures market here. I'll just see what these are the E-minis. Yeah, I'll just see what the E-minis are traveling. It's probably the same. And UNG. Oh yeah, this was the interesting thing here, which we pointed out before. You know, this move here, you can quite clearly see as 1 and 2 here, and then this is all the third wave here with 1, 2, 3, 4, 5. This is the ETF here, and then we've had wave 4 here, and then we've had wave 5, right? But this is interesting because when we have a look at natural gas, the futures or the spot market, then it doesn't breach this low here. You know, we expected it to, you know, I was expecting it to move down here and take out this low here, but it hasn't taken out the low here. So that means that we're left with, on the ETF here, we're left with 5 waves down here. So that means that technically we could be looking at a decent retracement here. This is up here. So that means that all of this move here could just be wave 1, 2, 3, 4, 5, and then some sort of ABC here, that sort of thing, you know. Rather than looking at this here, as an A wave to here, B wave to here, and a C wave to here. Do you know what I mean? In fact, we can also get 5 waves out of this already, just depending on, you know, which market that you look at. If I look at just to make it a little bit clearer here, if I look at this this market here, this is a CFD market. So in this case, we've got 1, 2, 3, 4, 5 here. So if you're looking at the spot market will be at $3 too. So what we could do here is we don't need to do anything just yet. What we can do is we'll just chill a little bit, and I can count 5 waves up here, 1, 2, 3, 4, 5, but the wave 3 is a little bit short and just does a little bit of an overlap there. So there might be another high here. Not sure about that, but it doesn't really matter. What we're looking for here is this. We're looking for an ABC pattern here. That's what we're looking at for. And when we got that, then we can go long above there. It's that simple. In fact, Jason had this count. Let me just find Jason's count on this. Where are we? Charts, files, charts, commodities, natural gas. Jason. So this was Jason's count here. This is the spot market. Yeah, he's on the spot market here. Yeah, so he's got wave 1 here already with this here, then another wave 1 up here. So that's the same as my count actually, or I'm the same as him, whatever, it doesn't matter. But yeah, looking at this as wave 1 up here. So this is what I was just pointing out here. And this will be, yeah, this is also at the $3 mark here as well. So that's at the $3 mark. So we can look for a classic trading levels pattern across here. So we're in no rush at the moment, okay? We can see we've had a nice rush here on this. I don't know the story of all of this. I don't know if it's a Red Sea Suez Canal situation or something else. I don't know. But anyway, we just have to wait for this to play out here now. Okay, so that's basically what we'll do here for at this particular point. I'll just have a look at where the other ones are in terms of price. So yeah, but yeah, just to point out that this 5-way structure down here, I think that's really interesting. So that could actually give us what I'm thinking here. If I could just draw that better here as 1, 2, 3, 4, 5, something like this. And then 5 up here, something like this, you know. But this 5 waves here will give us 3 waves here and then 5 waves down. So when we're looking at natural gas here, on this one here, we've got a different situation here. So that means that the other ETF, that will give us 1, 2, 3, 4, 5, and then that will give us a correction, and that will give us another 5 waves up here. So we may end up with maybe you've got to rechange this and look at this as a WXY here. Or do we look at that as a truncated 5th wave here? Is that a possibility, do you reckon? Is that too much? Anyway, just food for thought. But basically we should be up here somewhere. So anyway, I won't waste your time, but we will look for, this is at $3.02 in here, so we can look at this in due course, you know. We'll look for a classic trading levels pattern across here. It'll come back. This will be 1, 2 in here, and 3, 4, and 5 up here in here. So we'll see that sort of settle in across here, and then we'll pick it up. So we got time. We got probably 2 weeks in here. Famous last words, and it just takes off. I mean, if it took this top out here, you could probably just go long at that point. I'm going to remove that now because it's not something that I would do. I need to set up. So anyway, I'll just wait for this situation to occur here. Alrighty, that's it, I think. Yep, alrighty. Thanks for tuning in. Cheers.